Talk about the chemical sector. What's happening over there? Ajay Joshi, chemical industry expert, is joining in with us. Ajay, thank you so much for joining in with us this afternoon on ET Now. And let's get started with it, because this sector, when you look at it, one and a half, 2 years, I think approximately that time, we've not seen it do much, right? In terms of whenever you look at the earnings of the company, nothing exciting in terms of profitability, margins. What's changing now? Is there a change coming in here, and where do we see it headed? Is the worst over for this industry right now?
Yes, good afternoon. I think, yeah, now we are heading towards, we are seeing signs of positivity all across the globe. India's domestic demand, it has always been strong. So chemical companies operating in the import substitution that are making chemicals local for local, they have been doing well and they will continue to do well. From China, there is some positive update. Their overall manufacturing index for last 3 months has been seeing some positive points. That means that the manufacturing activity is seeing good turnaround in China. So once China's demand resumes, whether it is agrochemical, pharma, fluorochemicals, it's a good sign for overall Asian and global chemicals market. So from China also, we are seeing positive signals now. From US, the agrochemical destocking is finally coming towards an end. So we will see fresh seasonal sales in September, October months. That will give good chance for Indian agrochemical exporters active in the export market, whether it is PI, UPL, Dhanuka, Bharat, all the agrochemical companies. So the last calendar quarter will give them a sign of relief, because the agrochemical industry overall for the past 1.5 to 2 years have been seeing a lot of trouble. From the European market also, now they have come out of this post-COVID era sluggishness that was met by Russia-Ukraine situation, causing them increased cost of production of chemicals. So from Europe also, in certain segments like flavor and fragrance, personal care, and agrochemicals, where giant companies like BASF, they are giving more and more contract manufacturing orders to Indian and Asian companies. So overall, geographical wise, now the chemical industries is ready to take towards the positive path.
Okay, moving towards the positive part, but Ajay, do you think there's any concern that one should watch out for, especially on just I'm talking about those commodity chemical companies, given that the pricing pressure ahead, that is a possibility. What do you think on those fronts, and what is lying ahead for these companies then?
Okay, so this time, now we need to segregate the industry not on commodity versus specialty, but segment wise. So even though there are commodity chemical companies like Galaxy and Rosari, but they operate in a segment called personal care chemicals. So that segment is doing tremendously well and will continue to do well, because it is direct derivative of our disposable income. So now we need to look these companies, their performance segment wise. Similarly, companies operating in fragrance chemicals, aroma chemicals, like PV Specialty, because most of their customers are European based. So they are seeing fresh demand pickup from customers like Givaudan, Firmenich, all the perfume makers. So now we need to move beyond the commodity versus specialty segregation and see overall as an end segment, like which segments are driving the demand. So whether it is personal care, flavor and fragrance, agrochemicals from September onwards, these three segments, are driving the demand, irrespective of companies operating in commodity or specialty side.
Okay. Also just want to highlight or actually talk about in terms of the contract manufacturing opportunity. What is that lying in there for Indian players, and how do we see the growth there?
For Indian players like PI Industries, Deccan, it's a good time. They have already been doing well. In fact, more and more European and American companies like BASF, FMC, they are outsourcing innovative molecules to these Indian companies for lower cost of production, basically cost optimization. So Indian contract manufacturing players will be very big gainers. BASF is planning to outsource two new molecules to one more contract manufacturing company in India in the incoming quarter. So it's a good sign. Whether it is SRF, PI, Deccan, all these companies are going to do tremendously well. More and more European and American companies, they are becoming hesitant of outsourcing these contract manufacturing businesses to China because of process patent loss. They don't feel protected by the Chinese government. So more and more opportunities are coming towards Indian companies, to the Indian companies.
Lastly, if you were to look at right now in the chemical industry, right, you've divided it into two parts. Which part would be more attractive to look at as of now?
As of now, for the Indian landscape, I think companies operating in the import substitution business like Deepak Nitrite, RP Industries, they will continue to do tremendously well. Plus, companies operating in the contract manufacturing business, they will do tremendously well. But there will be trouble for a couple of base chemical players like acetone, soda ash. There, it's a play of cyclicity. So some months they will see upward in sales, some months they will see downward in sales, because commodities eventually they are at the mercy of supply demand dynamics. So there we might see some challenges in coming months also. But companies active in the import substitution business that are making chemicals for India in India will see very good growth.
Absolutely. Thank you so much, Ajay, for joining in with us this afternoon on ET Now and talking to us about where the chemical industry is headed. And surely the worst seems to be behind. That's the word coming in there.
If you like this video, then like, share and subscribe to ET Now.